Mark, the Fed is remaining patient in its decision on when to raise interest rates. It is more bullish on the U.S. economy. There's new language in here about their worries about inflation running too low, but they still expect it to eventually rise towards their 2% target. And they are now also factoring in international circumstances, financial markets as well, as they assess when to start raising interest rates. Let me walk you through this statement. First of all, starting with the new language on the economy. Information received since the Federal Open Market Committee met in December suggests that economic activity has been expanding at a solid pace. Labor market conditions have improved further with strong job gains and a lower unemployment rate. Some of the new language here on inflation. Inflation has declined further below the committee's longer run objective, largely reflecting declines in energy prices. Market-based measures of inflation compensation have declined substantially in recent months. Survey-based measures of longer-term inflation expectations have remained stable. They go on in the statement to say that inflation is anticipated to decline further in the near term, but the committee expects inflation to rise gradually toward 2% over the medium term as the labor market improves further and transitory effects of lower energy prices and other factors dissipate. The committee continues to monitor inflation developments closely, and again, as they factor in everything they're looking at as they decide on interest rates, their assessment will take into account a wide range of information, including measures of labor market conditions, indicators of inflation pressures and inflation expectations, and new language here, readings on financial and international developments. Based on its current assessment, the committee judges that it can be patient in beginning to normalize the stance of monetary policy, repeating that key line from the December meeting, also dropping the previous language about considerable time as expected. The vote here was unanimous. Mark, they're more bullish on the U.S. economy. They see low inflation on their radar as a worry, but they still expect it eventually to move up towards their 2% target. But they're looking at some new factors out there. We'll have to see exactly how the markets read this latest statement from the Fed.